Hey everyone, what's going on? If you haven't subscribed to my second YouTube channel, I'm going to post a link to one of my videos there. Go ahead, subscribe if you have not. Alright, let's look at this video now. I'm going to look at gold versus many commodities over the past few years and agricultural products. And it just seems that, you know what? The gold price and the corn price, and if you look at orange juice futures, right? They have actually moved in similar ways to the downside. Not exactly, but we could just look at an interesting pattern that I noticed. And I do believe that inflation is going to pick up a little more than what we saw last year and more than 2012. And I do believe that obviously the government numbers are rigged, but we could just look a little more into this. All right, let's look at the price of gold, right? So we know that gold hit the top a few times, 1920, 2011. Where's it now? 1248. But then there were two lows at 1180-ish, around that range. We shall see if we're going to see a triple bottom in the price of gold. But let's do the math. So from the high of 1920 minus like 1180, so like a 38% move to the downside. So in the 1940s, I mean, excuse me, 70s, we saw like a 44 or 45% move to the downside in the price of gold. And it happened abruptly. And everybody thought the gold bull market was finished. And all the gold pessimists for the past few years are somewhat turning bullish right now. So that's an interesting segment to note, or interesting fact to note. Now let's look at orange juice futures, okay? So you could look at it, it's like 211 or 205. Let's just do that. So 205, this was the high in 2011. If you want to go to 2013, 2014, where's it now? Like 124, 125. So let's do the math right now. So it's like 205 minus like 125 divided by 205. Holy moly, a 39% decrease in the price of orange juice futures. No way. I never looked into this. I saw a video or two about this, but I never looked into it right now. And the reason why I looked into it is corn. The price per bushel for, price per bushel for corn. And let's look at that right now. So let's look at it right now. You want to go to like August 2011. We did see a peak price per bushel in 2012. So, but let's just look at from the highs when you saw gold and orange juice futures and whatever. 2011, 6.33 per bushel, okay? And where's it right now? 4.31 per bushel. Press control and plus at the same time to zoom in if you can't see it. So if you look at it, it's like 6.88 minus 4.31 divided by 6 point, what's the number? 6.88. Holy crap! This is the correction from, as you can see, it's a 37% correction. So if you can see this correction from August of that year, you've seen a similar move to the downside. But if you want to look at the correction from 2012, it's going to be a little more different than that. So it's like 7.63. I want to put in perspective. So 4.31 divided by 7.63. Okay, so it's a 44% depreciation from the price of corn in the year 2012. So that's something to note. So we've seen these hard corrections in just a few of these commodities. And silver, I didn't look at, it's a 60%, more than 60% depreciation or decrease to the downside. So what does this mean? It means that these traders on Wall Street, the big money guys, are viewing this as a cyclical play. That's how I'm interpreting it for the most part. Sure, markets are rigged. There's no doubt about that, which HFT, frequency trading, and all that. So my views have slowly but steadily changed a little bit about this after talking to some traders about this, after looking at some of this data as well. We know that markets are rigged, but it has to deal more with a cyclical move now that I'm looking at it a few years later after I started this YouTube channel. Okay, and now I'm looking at this corn fund. It's an ETF, I believe. And I got this from the nextbigtrade.com. He linked it up. I know he links up, I think his name is Justin. He links up some of my work to his site. So that's how I actually found out about it. I follow his work now. But let's just look at it from an interesting perspective. So what he analyzed on his tweet, he said that this is a bullish indicator right now. And what he said was that it's a bullish engulfing pattern. It's going to the upside in his opinion. That's how I interpreted what his tweet was, and he saw a huge volume spike, and that's why he said that, you know what, this could be positive for the price of corn. And this actually got me thinking on what to do for a video about this, because I never look into some of these commodities. Even though I saw a video or two about it, I put it to the side. I never looked into it until right now. And then I see the price of corn. It's getting hammered for the past few years. I looked into orange juice futures. I heard about that. Once again, I did not look into it until right now, like this morning. And I saw a similar move to the downside. Similar move to the downside in corn from 2011. Similar move to the downside from gold and silver to the downside. And the next big trade, the individual who runs that side, he interpreted it as a bullish pattern to the upside. And let's just look at what some guys on Wall Street are saying about the price of corn, right? It's like 4.31 dollars per bushel right now for corn. All right, now this is off the Blackstone website. Hit Control and plus at the same time to view it at a bigger screen. So it's on Blackstone.com, and Byron Reen, a well-known investor for Blackstone, he has surprises for the upcoming year for 2014, and he said that a few things. In spite of increased U.S. production, the price of West Texas Intermediate crude exceeds $110. Demand from developing economies continues to outweigh conservation and reduce consumption in the developed world. The rising standard of living and the shift to more consumer-oriented economies in the emerging markets result in a reversal of the decline in agricultural commodity prices. Corn goes to $5.25 a bushel. Wheat to $7.50, and soybeans to $16. So let's get this straight. He's calling for higher corn prices. He did make a wrong prediction for corn this year and commodities, so he was wrong there. But for this year, it just seems that with the sector beaten up so much, he could actually be right on that. And before I end this video, I just looked at corn, and I looked at orange juice, and I looked at gold. So those had similar declines. But if you look at something like, it must have been wheat, right? Wheat prices didn't follow the same pattern as those three commodities. So that's something to know. But I did find it quite interesting that you've had similar declines in the price of corn bushel, gold prices in ounces, and then also if you look at orange juice futures. So that's something to note, guys. But if you look at that, it just seems that with a decline to the extent that we've had, you know what, we could see the ship turning around for inflation. See, now we're looking at MIT's billion price index, and I'm going to zoom in just a little bit over here so you guys can see what's going on. So if you look at this, the annual inflation, even though I don't like these numbers, okay, I do think the CPI is definitely rigged, for sure. But then the billion price index, it's a little better because they look at price. They don't look at, my criticism of it is, if you buy a product in the store, look at the content and the size of the product. It doesn't seem accurate in my eyes, because we're getting bigger packaging, smaller packaging size, the same price. So that's inflation in my eyes. It's not accounting for it. But let's look at the MIT billion price index. In 2011, it's saying like it was a 4%. So that made sense for the prices in orange juice futures, gold prices, and corn price per bushel. And now let's look at where we are right now. CPI is a joke. It's saying 1%. That's how you could get like a 4% GDP the last quarter. It should technically be like 3%. And then you've had phony accounting. So the government numbers are a joke. This MIT Billion Price Index, a little better, 2%. I would still say that it's higher than what it's saying. But let's look at it. Orange juice futures, gold prices, corn prices. It reflects 4% inflation. Okay, that makes sense. And we could see the inflation rates, right? We're seeing these rates go down. And you could look at corn, gold, and other items as well. And what's that? Orange juice futures. So you could say, okay, if those three markets went down and the government's saying that the inflation numbers are down, you could say that Wall Street is trading based on these numbers, whether or not you want to agree with them or not. The interpretation could be that this is what they're trading off of, and since they're trading off these numbers, that's why those markets could potentially be down, and it could be a cyclical item. But when I start to see many individuals who are bearish in 2011 on precious metals and commodities, agriculture products, now starting to get bullish, you know what? It could mean that the inflation will be back. Thanks guys for listening. Goodbye.